Now, despite all the funds and credit facilities that government and private sector set aside for small and medium-sized enterprises, access to finances is still a key cause of failure of SMEs, with 70% of them failing within the first 3 years of inception. This is according to a report on barriers to Kenyan SMEs growth and investment by Strathmore Business School and Invest in Africa.
A working nation. A working nation. A nation whose workforce is largely driven by the small and medium-sized enterprises employing 84% of the hired laborers. This is a statistic on the barriers to Kenyan SMEs growth and investment report done by Strathmore Business School and private sector initiative Invest in Africa. Some of the areas that are highlighted in the report as challenges faced by SMEs indicate a disconnect between the planned outcomes of various plans, programs and causes by government and corporates and the reality. The first area is on practical and appropriate training and capacity building. Here, the study found that more educated SME owners or managers had higher bidding requirements such as minimum deposits and lacked the capacity to handle bigger jobs. The second area of challenge is access to and effective use of finance. The cost of financing is the largest challenge identified at 37%, followed by access to financial markets. Money from family members and personal savings are the most popular sources of capital and finance. This is even despite banks and the government providing various platforms and facilities that are tailored to SMEs' needs. These avenues such as SME loans, the Uwezo Fund, the Youth Enterprise Development Fund, among a number of other national and county government platforms for accessing credit have been formed based on financing being the key reason 70% of small farms die within their first 3 years. The report shows that this problem remains even after all these efforts, raising the question of whether they are effective, accessible, or run on realistic and practical terms. The other areas of concern regarding SMEs are to do with linkage with big businesses. The report shows that the biggest impediment SMEs face while trying to do business with big firms relates to high bidding requirements by big businesses and complicated bidding processes. Further, there is a disconnect between what SMEs think big businesses look for and what the big businesses actually look for. SMEs also have to battle with limited effective corporate governance, as mismanagement of the business is a key challenge, followed by unethical business practices. Small farms still struggle with the inability to grow. These business development challenges include limited access to primary resources and research, limited availability of external support, and the need to simplify the bidding processes for SMEs. These challenges have been highlighted in the past and projects put out to address them, but they still persist. The report shares possible ways out to ensure there is a level playing field for SMEs and to ensure the growing gap between big and small firms is bridged.